All right, everyone, let's get right into it. Today, we are breaking down the latest earnings report from the cybersecurity giant Palo Alto Networks. And let me tell you, this isn't just a spreadsheet full of numbers. We're going to look at how artificial intelligence is basically turbocharging their entire business and what that signals for the future of cybersecurity. So if you follow this industry at all, you're going to want to stick around for this one.
Okay, just a quick heads up before we jump into the details. This is all for educational purposes. It is not financial advice in any way, shape, or form. We're just here to analyze the public information the company has released. So, as always, please do your own homework before making any kind of investment decision.
Okay, let's start with the big one, the number that really tells the story here. Their Next-Generation Security Annual Recurring Revenue, or NGS ARR for short, has rocketed up to a massive $6.3 billion. This is the part of their business that's all about the future, and it is absolutely on fire.
And this chart, well, this really shows you what's going on under the hood. Look, their overall revenue grew by a very healthy 15%. That's great. But their next-gen security revenue, that grew by 33%. We're talking more than double the growth rate. This isn't just a small trend. It shows that their huge bet on AI-powered security is really starting to pay off.
So, growing the top line is one thing, right? But the real question is, are they making money doing it? Is that success actually making its way down to the bottom line? Because, let's be honest, growth without profit, that's not a long-term plan.
And the answer is a definite yes. I mean, look at these numbers. Their standard or GAAP net income jumped to $432 million from $267 million last year. And the non-GAAP number, which kind of gives you a better feel for the core business, hit $732 million. They are absolutely growing, and they're doing it very, very profitably.
And here's where it gets really impressive, in my opinion. A non-GAAP operating margin of over 30%. For a company that's still growing as fast as they are, that is just a sign of incredible discipline. It shows they built a really efficient machine.
And this isn't a one-time thing. The company's CFO, Deepak Galecha, made a point of saying this is their third quarter in a row hitting that 30% plus margin. That tells you this isn't luck. It's a solid, repeatable strategy for making money.
So you see these great numbers, and you have to ask yourself, okay, but why is this happening? What's the secret sauce here? Well, let's get into the actual strategy that's making all of this possible.
And the CEO, Nikesh Arora, he boils it all down to two massive trends. First, obviously, is the AI revolution. And second is something he calls platformization. It's this idea that customers want to simplify how they buy security.
So what on earth is platformization? Well, think about it like this. Instead of going out and buying 20 different security gadgets from 20 different companies, businesses now just want one single integrated platform that does everything. And that's exactly what Palo Alto Networks is trying to become, that one-stop shop for cybersecurity. And to make their platform even stronger, they're not just building new tools, they're buying whole companies. This quarter, they officially brought Chronosphere and CyberArk into the family. This is a super aggressive move to beef up their platform and offer an even more complete solution to their customers.
Okay, so the company's doing great right now. But what about the future? Are there any clues in the report that can give us a hint about where things are headed? Let's look at a couple of key indicators. Now, the most important metric to watch here is something called RPO, which stands for Remaining Performance Obligation. All that really means is their backlog. It's the amount of money from deals they've already signed but haven't delivered on yet. It's a fantastic indicator of their future sales pipeline.
And as of right now, their backlog stands at a staggering $16 billion. Let that sink in. $16 billion. That is just a huge amount of future revenue that's already locked in and waiting.
But here's the real kicker. Remember how their revenue grew at 15%? Well, their backlog, their RPO, is growing at 23%. So what does that tell you? When your pipeline of future business is growing faster than your current business, it strongly suggests that your growth is about to get even faster.
Wow, okay, so we've covered a lot of ground. What's the big picture here? If you're going to remember just a few things from this report, what should they be? Let's boil it all down.
So here's the story of this quarter in a nutshell. First, all the real growth is coming from their new next-gen security products, not their older stuff. Second, the AI boom is pushing customers toward their all-in-one platform strategy.
Third, that huge backlog, the RPO, tells us they have a very healthy sales pipeline for the future. And finally, the big task ahead is making sure those new acquisitions like Chronosphere and CyberArk get integrated smoothly. So really, the stage is set. Palo Alto Networks has a clear strategy, the market trends are in their favor, but it all comes down to one thing: execution. Their big platform bet is clearly paying off. But the real question is, can they successfully absorb these new companies to catch the next massive wave of AI-driven growth? That is the billion-dollar question. Thanks for tuning in.